from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Apple is not a monopoly. That's the judge's final verdict in the Apple versus Epic showdown. But the App Store suffers a big blow that could cost Apple billions. We will dig into the mixed ruling for both the iPhone maker and the game maker. Plus, remembering the 9/11 attacks on the United States as we prepare for the 20th anniversary. We take a look at how the internet, and more specifically social media, has changed since 2001, and how the attacks might have been different today if they happened today. And community and crypto with the Currys. I sit down with basketball star Steph Curry and his wife and entrepreneur Aisha Curry to talk about how they are investing in kids and families in Oakland and Steph's latest foray into digital assets. But first, to the top tech story of the day, a big blow for Apple. A federal judge has ruled the world's most valuable company can no longer force developers to use its payment system in apps. The judge granted an injunction sought by Epic Games while also ordering the game maker to pay damages to Apple for breach of contract. The order could take a big bite out of the App Store's profits, which brings in an estimated $20 billion a year. But the judge also ruled Apple is not a monopoly. And the iPhone maker says this is a win. Bloomberg's Mark Gurman, who covers Apple for us, is with us. Also, Jason Schreier, who covers the gaming industry, with us to discuss. Mark, you and I were both on that call with Apple's general counsel, Kate Adams, earlier today. And she didn't just say this is a win. She said this is a huge win. What do you make of how Apple is, some say, spinning this outcome?
So Apple's focusing on the good, right? And if you are a PR person for Apple, if you're Apple, you're not going to come out and say that this is bad when there's some good that you could, promote instead. So the judge not ruling that Apple is a monopoly, obviously a good thing. The judge criticized the 30% cut, but didn't require Apple to change it. A good thing. She's not forcing the allowance of third-party app stores or sideloading. That's a great thing. The bad news, this is the biggest change ever coming to the App Store. She's going to force all app developers to be able to promote outside purchasing mechanisms. So you can go to the web to complete your purchases, whether that's V-Bucks in Fortnite, whether that's a book in the Amazon app. Of course, Apple already implemented this or said they would implement this for Spotify, Netflix, and other apps. Now this is going to expand to games, which is, of course, a lot more lucrative.
Meantime, Epic says they're going to appeal the decision. And Jason, the way you put it, they lost on every count. They're going to have to pay millions. But isn't this potential dent in the App Store, a victory for Epic?
It is a victory for Epic, but you know what is not a victory for Epic? The fact that Fortnite, their game, is still not in the App Store, and the ruling from the judge does not require Apple to reinstate it. So that is a huge blow for them, in addition to them losing pretty much every count that they had. Tim Sweeney, Epic CEO, said on Twitter today that this was not a win for customers and developers. It seems like the Epic camp is pretty unhappy about the ruling, despite that win. The only winner here really is the third-party developers who might benefit from these App Store changes. Epic is not happy today.
Right, Epic saying, and Tim Sweeney himself saying, the ruling isn't a win for developers and consumers, that Fortnite will return to the App Store when and where Epic can offer in-app payment in fair competition with Apple. In-app payment passing along the savings to consumers. Now, Mark, Apple's general counsel said they're going to look at the ruling closely and decide later whether to make any actual changes. Will those changes actually come to pass?
There's nothing to look at. It's pretty crystal clear, at least to me, what's going to happen here. Apple announced last week that they're going to allow reader apps, which is books, which is music, media, video, basically your Netflix, Spotify's, and Kindle readers of the world, to have buttons in their apps to complete purchases. So if you want to sign up for Netflix, you click a button, takes you to Netflix website, you log in, you give your credit card info, you go back to the Netflix app on the iPhone or iPad, and you keep it moving. That's exactly what Apple is being asked to implement, but for games and other app categories as well. It's pretty simple. I think this is going to be very easy to implement. According to my back of the envelope math, this is probably going to cost Apple between $1 and $5 billion per year, which you compare that to their $350 billion per plus income they're expected to make in fiscal 21, not a big deal. Still very significant. I think Apple is going to implement this. There's a 90-day stay on the injunction. So we'll probably see this early next year going into effect at the same time as the previous reader ruling from last week.
So it's not just game makers, but basically any kind of app. I mean, Jason, what does this mean? Should these changes come to pass for game makers and essentially everybody else?
Yeah, it's interesting. You know, I haven't seen a ton of people talking about this, but from a practical perspective, I'm not sure that many consumers want to go to an external store to make their purchases and have to enter their credit card again when they could just do it through Apple. And how many people are really going to see that as a barrier and not actually make the in-app purchases? I think that's going to be some calculus that some of the developers take into account when they're deciding, hey, do we want to really use a third-party payment processor, or do we want to just stick with Apple? Is that extra 20% or whatever it turns out to be, is that really worth it? Or are we going to lose a lot of customers along the way? The real winners here, I think, are going to be the big gaming companies, the EAs and the Activisions of the world, who have these massive mobile games like Candy Crush, like Star Wars, that are making many, many millions of dollars, over $1 billion a year in Candy Crush's case. And they, when they do switch to their own internal devices or when they switch to third-party payment processors, they will see a lot of money as a result. But for the smaller developers, I think it's really going to be a case-by-case basis if they think it's actually even worth it to do this.
And important to note that Epic has open litigation complaints against Apple in the EU, in the UK, in Australia, and of course, complaints against Google as well. We're going to follow all of those. Bloomberg's Jason Schreier and Mark Gurman, thank you both for weighing in. We'll continue to follow your commentary online. I want to look at how markets reacted to the ruling. Bloomberg Katie Greifeld joins us. And Katie, Apple took a big leg down as soon as this ruling came down. What can you tell us?
That's exactly right. So you saw those headlines hit at 11:30, and you can see what that did to the stock. Fell sharply, and it stayed there. Apple closed about 3.3% lower in total on the day. That is its biggest loss since about May, Emily. And that, let's zoom out though and look at what it meant for the companies who actually list on the App Store, because actually it was a great day for them. You had names such as Zynga, such as Bumble ending firmly in the green, since theoretically Apple won't be taking a cut from them anymore. They won't have to pay that App Store toll. That's why you see the stocks behind me really lifting higher on this Friday. But if you look at the broad indexes, though, it's a bit of a mixed picture. You saw the S&P 500 and the NASDAQ 100 both diving really just in the last hour of trading. But your small caps really bore the brunt of that hit. The Russell 2000 index finishing about 1% lower. But I want to stick with the S&P 500 because, Emily, this was actually its fifth straight day of losses. That is the longest losing streak since about February. And over the past 5 days or so, it's down 1.7%. So we're still not at that 5% correction level that we keep talking about. That hasn't been hit since about November of last year, Emily.
All right, Katie Greifeld, thanks so much for that roundup. We'll see where Apple opens Monday. Meantime, in developing news, digital payments company Stripe is said to be in early discussions with investment bankers about going public as soon as next year. This according to Bloomberg sources. The 11-year-old company was last valued at nearly $100 billion. Stripe is one of the most anticipated listings in years and would mark one of the biggest private companies to ever go public. We're going to continue to follow that one. Coming up, we take a moment to remember the tragedy of September 11th as we recognize the 20th anniversary coming up tomorrow. How social platforms have shaped our society in the last 20 years and how reactions to the attacks might have been different if Facebook and Twitter had existed at that time. We'll explore that question next. This is Bloomberg. We take a moment now to remember the 9/11 attacks on the eve of their 20th anniversary. Much has changed since tragedy struck America, including the power of the internet and social media. When those planes struck the Twin Towers in New York, Jack Dorsey was tinkering with taxi dispatch software, and Mark Zuckerberg was a senior in high school. It leads one to wonder if social media had existed then, how might 9/11 have been different? Bloomberg's Naomi Nix explored this very topic in this week's Fully Charged newsletter. Naomi, thank you so much for joining us. It certainly is a provocative question. What is your hypothesis as to how 9/11 and how we digested and weathered it might have been different had Facebook and Twitter been here?
Yeah, I mean, I think, when I was thinking about the 20th anniversary of the attacks, it really made me realize how much the internet profoundly shapes the way we consume these really sort of critical news events and really sort of tragedies. So I think at the time, like, if you think about it, as we were sort of getting information about the attacks, news organizations would have been tweeting updates from the law enforcement and the White House. We would have likely seen graphic footage of people running away from danger or jumping from danger on YouTube. On Facebook, we would have seen politicians talking about how they're praying for grieving families and they're sort of pledging, calling for justice on behalf of those families. And so I think there would have been a lot of us would have been focusing a lot on, what was happening on our screens and maybe less on sort of conversations with our loved ones huddled around a TV screen like we did back then.
Meantime, the Taliban has taken over Afghanistan, and they are much more technologically savvy today than they were 20 years ago. They are using social media to get their message out. I spoke with the head of Instagram, Adam Mosseri, a few weeks ago as the Taliban was taking over to talk about how Instagram and Facebook are managing this. Take a listen to what he had to say.
The Taliban is under U.S. sanctions, which means that due to our dangerous organization policies, we don't actually allow any presence, so any celebration, any promotion, or any representation of the Taliban on Instagram or on any of the Facebook apps or applications. And so we were relying on that policy to proactively take down anything that we can that might be dangerous or that is related to the Taliban in general.
Now, Facebook and Twitter, Naomi, are always under pressure to manage terrorist messaging across social media. But now are they under even more pressure now that the Taliban is back in power?
Yeah, I mean, we've seen some reporting, particularly from the New York Times, about how the Taliban is currently using social media, particularly Twitter, to get its message out. This idea that it's a sort of kinder, more gentler organization than the one we remember when it was in power so long ago. And so that inevitably brings up the question about how those platforms are policing an organization that the United States has considered a terrorist organization. Facebook, as Adam alluded to, Facebook has banned the organization. Twitter hasn't done a direct ban. But even with restrictions against the Taliban, of course, the sympathizers of the Taliban, are getting their message out on social media anyways. And the platforms are going to have to figure out how much to stop them and whether they'll be able to catch all that content.
As you say in your newsletter, the promise is that everyone gets a voice. The problem is that everyone gets a voice. Very poignant words from you there. Bloomberg's Naomi Nix, thank you so much for joining us. Okay, coming up, the NFT craze continues. Now listeners can buy in on a song by their favorite artists and earn royalties along with them. We talked to international DJ Blau about his foray into NFTs, which he thinks are the future of culture. Next.
To understand Bitcoin, you sometimes have to climb a very deep down the rabbit hole. Conventional wisdom is wrong about Bitcoin. Consensus in the investment community is that cryptocurrency prices will be hurt by an increase in regulation, while the launch of a US ETF could propel prices higher. And while this is likely in the short term, the opposite might be true in the long run. To understand why, consider this. Since it was created in 2008, Bitcoin has inhabited a parallel investment universe that led to wild rallies and crashes, and this caused some who may have wanted exposure to steer clear. While private investors and hedge funds are able to buy crypto, pension funds, money managers and banks largely won't know which boxes to tick on their compliance documents. If, however, a regulatory environment was put in place, that would open the door to a wealth of money chasing explosive returns and diversification benefits. Little wonder then that in the minutes after the Basel Committee on Banking Supervision in June proposed the toughest capital requirements for holdings in crypto assets, Bitcoin rallied. Now, consider the flip side. US Securities and Exchange Commission Chair Gary Gensler indicated that he would be more welcoming to an exchange-traded product backed by cash-settled futures rather than by actual Bitcoin. And while this will create a new access point for investors, the long-term implication is negative. Why? Well, because while Bitcoin is an inherently scarce product, cash-settled futures are not. Supply is potentially infinite as long as there are market makers willing to take the opposite side of the trade. Now, it is worth emphasizing that the knee-jerk reaction in both regulation and ETFs will be in line with what the crowd expects them to be. Yet it's also important to consider the ultimate implications, if only so that we don't get carried away in a speculative frenzy. And all of that just proves once again that to really understand Bitcoin, you really have to go very deep down the rabbit hole. This is Decrypted. I'm Eddie van der Walt. For more content like this, follow us on your favorite platforms.
Now, Bitcoin is bouncing around $45,000 and DeFi is looking to go mainstream. But what is getting everyone talking in the digital asset world are NFTs. Non-fungible tokens allow holders of art and collectibles to track ownership, and they're staging a resurgence after fading from the headlines during Bitcoin's springtime swoon. International DJ Justin Blau is announcing a new platform, Royal, that'll leverage blockchain technology to create a new economy for music, and even you can own a piece of it. Here's my conversation with Blau from earlier.
The reason why it's hard to make money from streaming as an artist is typically because artists sign a lot of their rights away to a record label or to an intermediary. Those artists that maintain some kind of independence end up actually capturing a lot more revenue from their streams. It's just kind of been a little bit misconceived in the public narrative. So for those artists that do maintain ownership of their music, streaming revenues have actually gone up quite substantially in the past 5 years.
So when did you get into cryptocurrency and NFTs and realize that this could be part of the solution?
Yeah, I think my exploration of crypto started in 2014. I started experimenting with the idea of digital collectibles and how that might apply to music. But my dream was always to somehow get fans involved in the ownership of that music. Ultimately, fans are the reason why music is distributed and heard around the world. Fans share it with their friends. They're the ones going to the concerts, and they're ultimately the main driver of music's popularity in general. So why not incentivize the same group of people that are responsible for that distribution with actual ownership of the music? The means of doing that in a more fiat banking world, it's pretty difficult, but with distributed ledger technology, it's quite a bit easier to assign that ownership and to distribute cash flows associated with that ownership.
Then tell us more about Royal, your platform. How does it work for artists? How does it work for fans?
Perfect. Yeah. So Royal's a new project of mine and my best friend from college, JD. And the principle behind Royal is that music is an emerging asset class that most people don't have access to. Royal is a platform that enables anyone to invest in music and earn royalties alongside the artists that make that music. And realistically, a lot of hedge funds and private equity firms have been investing heavily in catalog and in music assets as inflation-protected assets. The public in general just hasn't had that access, and we want to give them that access.
What are the first songs coming to the platform, and what other artists are you hoping to work with?
Of course. So I'm definitely going to be the guinea pig here. My music is going to be first to platform. And we're lucky to have a lot of amazing, huge artist investors in the platform that are going to use it as well. We haven't been very public about who those artists are, but I could confidently say we've got at least 5 that are in the top Spotify 100. So we're quite excited to work with them.
What other industries do you think could benefit from this kind of approach?
That's an amazing question. So it kind of starts with music, right? Giving fans ownership of music with artists is a first step, but there's no reason why the underlying technology couldn't apply to gaming, to journalism, to authorship, to YouTube, or even film and television. Obviously, film and television rights are quite a bit more complicated, but the possibilities are endless once the technology is built. And we're really excited to explore some of those other verticals after we conquer music.
I'd love to talk a little bit about Clubhouse because you're super active on there, and every time you get on, seems like there's a room devoted to NFTs. How much has Clubhouse fueled interest in NFTs in particular, do you think?
I think quite substantially. I started kind of talking about NFTs on Clubhouse in September of last year. That was, things have moved so quickly that it was kind of early back then. It was so recent, but a year ago is when things really started. But I think during the pandemic, everyone was so locked down and just thinking about new ideas and exploring ways that they can connect digitally. And NFTs just happened to be in that perfect moment where crypto was entering a new bull market and people started to get excited about the technology. Clubhouse was just a means of connecting people around a mutual and exciting idea. And when everyone was home and kind of bored, not able to go outside, they're spending a lot more time on their computers. They're looking at digital assets, whether they're tokenized or not. And the principle of NFTs just seemed to resonate with people the more you explained it to them with words. And Clubhouse kind of created that medium where instead of just reading about something, you can really hear the passion behind people that were in the tech and really, building the tech. And I think that was instrumental in really, bringing NFTs mainstream.
That was Royal founder Justin Blau. Coming up, we're going to hear from Golden State Warriors star Steph and Ayesha Curry next about their work to help Bay Area kids and families through the pandemic and through their foundation, Eat, Learn, Play. And Steph's dunking into crypto, what he has to say about teaming up with the crypto platform FTX, Tom Brady, and how digital assets could open up new economic opportunities. My conversation with Steph and Ayesha Curry is next. And looking at the week ahead in tech, Oracle out with first quarter results. Monday, Tuesday, Apple unveils a host of new devices, including 4 new iPhones at an all-virtual event. Tuesday, also the deadline for ballots in the California governor recall vote. Wednesday, a big SpaceX launch. We'll be all over it.
We need much more global vaccination. We need much more preparation for the next pandemic. And this is the biggest vulnerability for our national security from the rest of the world over the next decade.
Former U.S. Treasury Secretary Larry Summers there saying that COVID-19 is the biggest risk to U.S. national security. You can hear more of that interview straight after Bloomberg Technology on Wall Street Week with my colleague David Weston. The pandemic has also had an unquantifiable effect on our underserved communities. The inequality gap that existed prior to the outbreak has only gotten wider and harder to bridge. Bay Area power couple Steph and Ayesha Curry launched their own foundation called Eat, Learn, Play to address this very issue: inequality, children, families. Its newest project is a mobile resource center built from a former school bus that will deliver nutrition, education, and recreation to kids in need in Oakland. I caught up with the Currys earlier today at the Workday Charity Classic, where they gathered a few star athletes to play golf for a good cause, and started by asking about their work with Oakland kids and the impact they've seen COVID have on the community.
The pillars that we've identified in our foundation to create that well-rounded experience, and like you said, unlock the potential for them. The pandemic only, increased that need exponentially, and it's sad to think about, knowing how many meals we've been able to distribute since April of 2020. Had we not been capable of springing into action and aligning with the partners that we did, and that we're over 17 million meals to date. It's alarming to think about, but it's also awesome to know that we've figured out a way to be efficient and to support the community that needs it, and opportunities like this to continue to raise awareness and raise money and stay on that mission is important, because the pandemic those effects are going to continue to last for a while, and so we're trying to do our part.
Yeah, and a bigger effect that maybe isn't in the forefront of people's minds now as we're entering this new school year is literacy. So this is a new pillar that we're unlocking when it comes to our Learn pillar, and especially in the Oakland community, 19% of Black students and 24% of Latinx students are reading at grade level, and that's it. And so for us, going with that gap year, I'll call it, that we all had, making sure that the kids are, building upon those literacy skills, and we're increasing the statistics and seeing change for these kids, I think is one of the most important things right now.
So this bus will serve underserved children and families. There's a food pantry on one side, there's a library on the other side, there are some basketball hoops. When this hits the streets of Oakland, what impact do you want this to have?
I want excitement.
Exactly.
I want to bring about excitement in the kids when it comes to reading. And when we launched a few days ago, I think we saw firsthand how this model can work, because they ran up to the bus, and I have little ones, so as a mom I was like, oh, they're gonna go straight for the basketball hoop, which is fine, but they went straight for the books, and they were so excited to receive these tangible items. And sometimes it's really just about getting the resources in the hands of the kids, and so for me, I'm really excited about that. And then this bus is going to give us the opportunity to provide over 500,000 pounds of produce a year into the community, so I'm very excited.
There are some warriors here, Phil Mickelson, Peyton Manning here to play. How important do you think it is that leaders of this generation, that athletes, that celebrities, reinvest in their community and think about that?
It's extremely important, and there's a lot of different ways to do it. I think that's the thing I'm kind of noticing around a lot of the major sports and major athletes, using your social channels to talk about things that are important to you, leveraging your platform and your network and your time to do meaningful work. And you see a lot more athletes now doing it while they're playing and trying to find a way to set up a lifelong journey of service. That means a lot. So the names that you said that are here, taking time out of their busy schedules to support an event like this, knowing that it's impacting lives here in the Bay Area, and hopefully that inspires more work to be done, and we know work needs to be done across the country. So it's amazing to see the social responsibility kind of permeate through all the different sports and major athletes that are making it a priority.
I just finished watching The Last Dance, and I was struck by the contrast, because Michael Jordan says, I never thought of myself as an activist, I thought of myself as a basketball player. How do you think of yourself? Do you think of yourself as an activist, as a basketball player, both?
I mean, I try to fulfill every title, I think, in that respect, and do it knowing that I have an amazing team around me that can unlock another level of impact, with how I use my voice, how we show up in the community, what we spread awareness about. And so that line is, I'm glad I'm playing in this era, because it's not the exception anymore. It's kind of expected that you are aware, socially conscious about what you can do to change lives. So like I said, there's a lot of different ways to do it, but I think it's encouraged and it's well received.
Aisha, you actually opened a business in the pandemic, and you talk a lot about supporting women. You support women entrepreneurs through that business. The data shows that women are losing ground in the pandemic, at work and at home. Melinda Gates told me that women she thinks are in crisis. How worried are you about that, about women in particular?
Saying that I understand what she's saying, but for me, I mean, we've seen it through the ages, women are resilient and strong and powerful, and I know that we're always going to come out on top. But I think the important thing is always getting back to that fundamental of rallying around your people and the community of women. And for me, if I could do a little bit by, featuring these small Black-owned businesses in my store, I mean, that's one small step in the right direction. And so I think if a lot of us can rally around that and keep it going, we'll be just fine.
Steph, you caused a bit of a stir this week, talking to Twitter, saying you're getting into crypto and you wanted some help. And some people think that crypto could actually open up economic opportunity for underserved communities. I'm curious, what excites you about crypto? What do you think the potential is there?
I think we're obviously at the beginning stage. I know it's been around for a while, but from a mass awareness perspective, understanding how this is going to be a part of the next generation of how they think about financial opportunity, access to that. And right now it's just about education, I think, in terms of what it actually is, how it can be leveraged in the proper ways. I'm curious about it. I'm involved in it, and understand there's a big community right now that is excited about what this will mean for democratizing the financial institutions and how we do things. So it's about educating the next generation that this is going to be around. This is going to be something that you could participate in, and hopefully we can create that access and opportunity through it, and do it in a fun way too, because it is kind of overwhelming when you think about a lot of the questions that people have about what is it actually doing.
Tom Brady told you not to laser eyes, and you changed your avatar to a bored ape. What's up with that?
You got to have fun with it. That's the thing for me that makes sense. I saw when we both signed up with FTX, and there was a little dip in the Ethereum price after he had launched. It's very similar to when I did, but it's a volatile kind of market right now. But the long-term prospects are very positive, and to the biggest thing about what Tom is doing, what I'm trying to do with that partnership is specifically is create a socially conscious platform within crypto. And the founder of FTX, Sam, he's very committed to that, setting a standard for what it means to be socially responsible within the successes of crypto, and I can get behind that as well.
But I'm still trying to figure out what a CHAM is.
That's true. We'll download you on that.
and you also have your penny jar capital, where I know you're investing in things like upskilling workers and pay equity, which is important to you as parents of daughters. Like, where are we going to see you put your money to work there? What trends are you excited about?
It's all about basically everything that we do. Hopefully there's a form of inspiration, a form of impact, and a form of leveling the playing field across the board. So you mentioned the pay equity gap, and the company Syndio, which is a huge has huge momentum in terms of creating a template for what it means to pay people what they're worth, pay women what they're worth, decrease that pay gap. And we're mission aligned, but it's an amazing business as well, and that's what Penny Jar is about: identifying those companies that have huge opportunity, huge scale, great leaders, but are having a huge impact as well.
Steph and Aisha Curry there. Coming up, the future of cleaning. We're going to speak to iRobot CEO Colin Engel about the company's new Roomba vacuum and how AI has accelerated through the pandemic. This is Bloomberg. Your house is already getting a lot smarter with smart devices designed especially for your living room, kitchen, and even laundry. But let's not forget those floors. This week, iRobot introduced a new model Roomba robot vacuum cleaner that uses AI to identify and avoid hazards while cleaning. It also can respond to specific voice commands about where and when to clean. Joining us now, iRobot CEO Colin Engel. Colin, great to have you back with us. So how does the new Roomba improve on the old one?
So it's all about intelligence, and the more people are depending on their robots, the smarter the robots actually have to be in order to do a good job. Feeling like you have to clean up before the robot cleans really doesn't work. And so that we've invested a tremendous amount in the intelligence of this new robot, where it uses machine vision to actually be able to spot obstacles like cords and even pet waste in your home and make sure that it does the right thing and always completes its job. We also are trying to embed into the robot a willingness to, or an ability to follow rules of the home. So if you set up while the baby naps from 12:30 to 1:30, regardless of what you're doing, if that happens, time to go and be quiet. And so this idea of the robot being more thoughtful and respectful of the home is another dimension of this improvement in intelligence we're developing.
How much do you think the pandemic accelerated the adoption of artificial intelligence and also our comfort with robots doing more things?
The pandemic and the need to work from home placed a huge new burden on both the home and us. If we had cleaning people, well, they probably weren't coming to the home. If our kids are not going to school in person, then, well, on top of your day job, you're entertaining and managing your children. And so that it just shrunk the ability of us all to manage our home. And so that things like Roomba became very top of mind as ways of relieving some of this pressure. And yet our homes are very complicated. And again, we needed to, it certainly both accelerated the growth of the category, but also the need to make our robots smarter so they can find good times to clean. So they don't, bother you while you're working in the study. And it's both technically made robot development really interesting, but also the industry has seen remarkable growth.
Take me out 20 years. How much will robots have changed our lives? What will they be doing for us that they're not doing now?
I think that if we go out 20 years, one of the huge challenges that society faces today is aging. And people really need the ability to remain independent of healthcare services longer in order to maintain their standard of living, because there's simply not enough young people these days to care for the old people. And so as we move out in time, not only will robots be more active in ensuring that our homes are well maintained, that our homes are secure and healthy places, they'll also be taking on responsibility for making sure that we are able to live independently in these homes much longer than we can today.
Now, we're in the midst of a global chip shortage, and I wonder how that's impacting your business and when you see relief.
It is absolutely impacting our business. I mean, we will end the year without the ability to fully supply the rapidly growing demand for our technology. This is something that we've previously communicated and built into expectations, but it is going to take some time to work our way out. It is a very capital intensive and time consuming thing for the chip manufacturers to increase production. It takes a long time for just the logistics of moving product around the globe to normalize. And so that we're definitely facing, like many companies, some real challenges in 2021 and hope that they begin to moderate in the first half of next year.
All right, Colin Angle, CEO of iRobot, thanks so much for joining us. Coming up, buy now, pay later. A firm soars after reporting earnings results for the fourth quarter, revenue beating estimates. We're going to speak with CEO Max Levchin about the strength of their model and their partnership with Amazon. Next, this is Bloomberg. Another story we continue to watch, the biggest meal delivery services are suing New York City. DoorDash, Grubhub, and Uber Eats say the city's new 15% cap on delivery fees interferes with their right to negotiate contracts with restaurants. They argue that will likely lead to higher prices for consumers and lower earnings for restaurants and delivery drivers. New York officials say the initiative is legally sound and that the city will defend it in court. Meantime, shares of Affirm rallied big time today after reporting fourth quarter results, revenue beating expectations with a hugely optimistic outlook, showing the strength of the buy now, pay later model. Joining us now, Affirm CEO Max Levchin. And Affirm shares didn't just rally, they shot up, Max, 34%. How do you back that up?
You know, I'm primarily focused on delivering on the ambitious goals that we have for the company. But the only way to do this right is you have to think in years, not quarters, not today's pop or tomorrow's whatever. And so I'm pleased there are more people apparently supporting our mission, which is really, really important to me. And I'm genuinely very happy about that. But I gotta stay focused on 3, 5, 10 years out.
Everyone's excited about this Amazon partnership. When will Amazon purchases with Affirm start? And how will Affirm make sure it takes share in a deal that's not exclusive?
You know, too early to really talk about that, just primarily because it is a test phase of the partnership, and you know we're pleased it is where it is. But you know, ask me again in a little while. That said, these purchases have started. You know, the test is real. We're literally testing it day and night. So you know, more to talk about in a little while.
Now, the industry, the buy now, pay later industry, is evolving rapidly. There is competition coming from PayPal, Square buying Afterpay, banks exploring buy now, pay later for card issues. How will you continue to compete with all this change?
That's really a great question, and if I came off excited yesterday on my earnings call, which people have told me, I am, in a sense that you know we are in this really great moment of Affirm's sort of a short history as it is. We're launching a ton of really cool new products, and I'm at my happiest when I have a chance to build and deliver something new. So this Debit Plus card that we're announced, we have all sorts of stuff that didn't even make it into the earnings call. This thing called adaptive checkout that we're bringing to market to our merchant partners. The huge partnerships that we've announced, the ones we're testing, the ones we have, the scaling of the Shopify relationship. Fundamentally, what we're doing is we're trying to be different and best at what we do, and a huge part of it is the mission itself. You know, we 10 years in, not a penny of late fees, no gotchas, no deferred interest. All of that is what solidifies our partnership with the end consumer, and we continue to bring interesting new things that no one else has done, can do to the merchants and deliver results. Larger carts, better checkout experience, higher ticket transactions, etc. So feel very, very confident in our ability to compete, again, because we're launching all these cool new products.
Given your long history in payments, I have to ask you about the Apple Epic ruling. Epic losing on almost all counts, but one major potential victory, Apple being ordered to change its App Store payment system to allow developers to go outside the app and send consumers elsewhere to pay. What's your take on this?
You know, to be completely honest, and as much of an observer of the industry as I am, Affirm does not have an in-app purchases, or you know, we don't really sell our product in the App Store, so I don't have direct experience with this and never have. I mean, obviously, it's a matter for the courts, and you know, decisions get appealed and etc. That said, we finance a tremendous amount of Apple products in Canada. We help them sell devices in other geographies, and they're a beloved brand with extraordinary mind share, and we're proud to call them a partner. So from that point of view, you know, we're very excitedly part of the Apple story.
So would you not say that Apple is too powerful, that the power needs to be checked?
You know, again, not having a direct relationship with Apple of that type, it's hard for me to have a personal view. I think writ large, I believe that competition is good and free markets need to do their jobs. Sometimes they take too long, which is when you need regulators. And, you know, this is true as much in things like platform firms and charging developers as it is just, in for example, my own market in financial services. I'm generally a pro thoughtful regulation, and these things take many innings of thoughtful debates to figure themselves out. And I generally believe that the right conclusions get reached between regulators and free market enthusiasts.
All right. Well, Max, always good to have you here, and thanks for taking a few questions on that. Huge day for you, at least according to investors. We'll continue to follow, see where it opens on Monday. Affirm CEO Max Levchin, always great to have you here on the show. And that does it for this edition of Bloomberg Technology. Stay with us. My colleague David Weston coming up next with Wall Street Week. You don't want to miss it. I'm Emily Chang in San Francisco. This is Bloomberg.